Hi everyone. In this video, we'll talk about the other Q4 results that were announced today. United Spirits, Dixon, Max Health, and Torrent. So surprising to see phenomenal results from United Spirits, and Dixon also has beaten estimates. Let's look into them in detail. So first, let's look at Max Healthcare. Max Healthcare estimates were at 60%, 63% sales growth and 53% profit growth. But still, the company has done really well. 34% sales growth, 26.5% profit growth. The stock rallied towards the end of the day. The results are considered positive by the market. So let's look at the overall highlights of the result. So as mentioned, 34% gross revenue up. So there is a 30% increase in occupied bed days, which is a positive for the company. And EBITDA has grown at 26% YoY, and PAT has grown at 26% YoY again to 376 crore for a company, for healthcare company. These results are robust and good, and they've been continuously growing well over the last few quarters. So EBITDA per bed has gone up to 74 lakhs. They also have signed an agreement for a new 200-bed hospital in Pitampura. They have acquired land for expanding another hospital from 387 to 527 beds in the next 2.5 years. So they also got ranked among top 20 companies in the S&P BSE 100. They are recognized as the next leader in by IAS for governance. Maybe they might get into Nifty 50 if they continue to do really well. So the upcoming hospital is one which we spoke about in Pitampura, and there is a brownfield field expansion that's been planned in Vaishali. So there is a lot of long-term growth potential for this company, just like other companies like Apollo Hospital, KMCH. This company seems to be doing really well. So there is a good amount of revenue contribution coming in from new units. Revenues from new units grows from 2% to 15%. So these assets will continue to improve their profitability, again, unit economics, because existing hospitals, the new ones will continue to drive your revenues and profitability without any additional costs. So they have also launched Max Lab and Max at Home, which is a digital and home care venture. So they have also posted very good results. This is an ancillary service when compared to their core service. We have to see if this can scale up like how Apollo's pharma business scaled. So there is a strong trend which has this scalability of existing infrastructure, and there is an improvement in asset utilization. So they are merging their subsidiaries, and they also have indicated a focus on operational streamlining. So next, let's look at Dixon, which is a major surprise. So the expectation was already very high, 130% sales growth, 109% profit growth. What did it deliver? 120% sales growth, which is a bit below estimates, but still it is good. But the profits have soared to 379% YoY, which is far, far higher than the estimates. So the revenue growth, as mentioned, 120%, and then profit up for the whole year, profit up to 29%, whereas for Q4 it is up 379%. So margin slightly down, 0.25% down. So profit before taxes rose to 4%. So their ROE and ROC are exceptional, which indicates strong operating leverage. So they have declared a dividend of 8 rupees per share. So they have acquired a 50% stake in another subsidiary. They have also incorporated three new subsidiaries. So they have exited AIL Dixon JV via a share swap with Aditya Infotech. So addition of new verticals like IT devices, telecom, wearables can actually act as a potential for future growth. So new subsidiaries and manufacturing units position Dixon in this manufacturing space as a very big high potential multi-bagger. So this PLI scheme could be a game changer. So you can get a lot of loan, several crores of loan at a very low interest rate. And the government is pushing for manufacturing. So one of the companies that can really get a lot of advantages through the manufacturing pushes Dixon. So there is a continued effort to improve their margins, speed, automation, process optimization, and cost control. So their margin should keep improving in the long run. So they also have strategic tie-ups and global brand manufacturing offer. So next, let's look at United Spirits. United Spirits is another surprise result. So 13.4% sales growth and minus 20% profit growth was the expectation. Whereas 2% was the sales growth. It is flat. But what is surprising here is the profit. Profit of 75% YOY growth. Whereas the expectation was just minus 20. So the stock already went up today as well as yesterday. So they re-entered Andhra Pradesh business after 5 years. So it has contributed positively to Q4 performance and it will support the future volume growth as well. So they've been focusing on premiumization. So they segment their product into low margin, high margin products. Among the high margin products, all the premium products, which now form nearly 18% of their net sales value, improves their margin. It will improve. It will continue to drive their growth. So the continued revenue growth management and productivity initiatives are likely to enhance their margins and support EBITDA margin improvement. So they are also coming up with a multi-year supply agility program. It will improve scalability across the entire value chain. So resumption of operations in Andhra and deeper penetration into high growth states. It's providing long-term opportunities. So they have one of the strongest brand portfolios. Their flagship brands include McD's, Royal Challengers, Johnny Walker. So strong brand value, brand equity is there. So there is a possibility of the company going up tomorrow. So let's maybe look at the charts of. So if you look at the chart, it remains stretched, but does it look bullish? Let's see. So on daily chart, it remains bullish. So there is a strong resistance at 1685, and then 1615, and then 1685. So if you look at it, so it is going this way. So there may be a strong resistance here. If if it opens gap up, then 1692 is the resistance where you should look to exit. So next is Torrent Pharma. Torrent Pharma is another consistent company which is delivering very good results. So this quarter expectation was 8.8% and 16.5%, but it delivered similar sales growth 8%, but profit growth is down only 11%. It has not met estimates, but still the results are decent. So the India market remains the largest contributor, 13% growth. US segments are also growing very highly, whereas Germany growth is poor, Brazil growth is poor. So overall, FY25 they have grown at 7%, despite pressure in Brazil. Other markets showed 5% growth in Q4, gradual recovery, though full year performance was flat. So continued growth in India. There is momentum in US. They're expanding in Europe, but the growth is not that strong right now. So Brazil performance declined. It depends upon the macroeconomic recovery of that economy and strategy execution to regain momentum over there. So the company is having a strong R&D pipeline and regulatory filings, especially in US and India. So overall, if you look at the four results, United Spirits has done really well. Dixon has done really well. Max Healthcare has also done well. The only company that has not met estimates is Torrent Pharma, but still all of them have come up with good results. Let's see how it turns out. So if you like this video, subscribe to our channel. If you have any questions, post it as a comment. We'll respond to you immediately. And if you are having any questions in your mind that has to be recorded as a video, let us know. We'll prepare and answer your questions with a video. Thanks a lot. Happy to have you here.